His insurance went from $50,000 to $250,000 overnight. This investor was in the middle of selling a 30-unit property in Jupiter, Florida, a deal he'd owned for nearly 20 years, and that one insurance renewal almost killed the entire transaction. The buyer couldn't close, the NOI was destroyed, and millions in equity were suddenly at risk. That's when Jerry Katz got the call. I was introduced to Dan Holmes by another investor involved in the deal, someone who said, "You need to talk to Jerry. He understands real estate, not just insurance." We stepped in, we restructured the insurance on that property, brought the premium back down, and saved the deal. We actually brought it down lower than he paid the year before, but that was just the beginning. Once the deal closed, Dan brought us the rest of his portfolio. Over 150 single-family and multifamily properties, multiple LLCs, policies everywhere, renewals missed, some properties underinsured, some were dangerously low with liability and no strategy. So we rebuilt everything from the ground up. We organized the entire portfolio with proper schedules and values. We consolidated coverage into 2 master policies. We increased liability limits. We reduced rate inefficiencies, and we saved him tens of thousands of dollars across a $50 million portfolio. We even introduced him to a lender who waived wind insurance. And who does that? An insurance guy? No. Dan called me and told me I changed his life. Today, he runs this portfolio side by side with his son and daughter, building a real family legacy. This episode isn't just about insurance. It's about how investors lose deals, equity, without even realizing it. And with the wrong insurance strategy, how everything blows up. So if you own 10 or more properties, especially in Florida, this conversation matters to you. Welcome to Real Estate Profits Boost. Let's get into it. So Dan, you've been in the real estate game for over 30 years. Take us back. How did your journey begin, and what was your first investment?
You know, I was very, very blessed to have an amazing dad who was in the medical supply business in Brooklyn, New York. He sold his business. He had some dough. He moved to Florida. I graduated college in 1991. And he decided alongside me to start investing in real estate in South Florida. One of the first deals we did was a 71-unit condo complex in PGA National. This was in 1991. That was kind of our focus back then, condos, which in latter years I decided to get out of for different reasons. But that's where we got started. This particular development, Meadowbrook was the name of the development in PGA National in
Ground up construction?
Palm Beach Gardens. It was we actually purchased it from the FDIC. It was a failed project.
Wow.
And we purchased it from them for, I'm going to say $3.5 million. Held on to it they were condos, so they were individuals. Held on to it for about 10 or 12 years and then sold them off individually for, I think at the end of the day, that was a great deal. I wish we had more of those deals, 12 or 14 million bucks, I'm going to say.
Right.
After everything was sold. Took us a couple years to sell them, but yeah.
But he was in the medical business. So he just said, hey, let's do it. Or how did he flip the switch to real estate at that point? Just because diversifying, moving to Florida, something like that?
Great question. And my dad always owned the real estate that his businesses were out of. So he owned quite a bit of commercial real estate in the city of New York, Brooklyn in particular, Bensonhurst, 86 and 25th. Great
Pomoni Garden.
Exactly.
Yeah. Go ahead.
So he always had an affinity to real estate. He always liked real estate. He was primarily a commercial guy, and we got more into the residential sector down here. And that's.
No, I wish we could find those deals today, right? It's like It's almost impossible, right, to find that deal today. And I'm sure your
Oh,
son can. Yeah,
man. And we were, yeah, so we were down. So yeah, we did FDIC. I did another 24 unit deal in Palm Beach Gardens with the RTC, you might remember, right? The Resolution Trust Corporation, after the savings and loan crisis and that whole deal. So, definitely, my background was in distressed real estate,
got it.
RTC, FDIC, foreclosures. And that's really where I cut my teeth.
No, awesome. And I mean, so what's the lesson? I guess is I always say when there's blood in the streets, right? That's the time to buy, and so on and so forth. But the biggest challenge now in Florida, as I'm sure your son. By the way, son, introduce yourself and tell us
Yeah,
how
yeah.
long you've been in real
I'm
estate.
Danny.
Yeah,
Yeah, Dan's
yeah.
son, Danny Holmes.
All right. No, I mean, introduce yourself. Tell us how long you've been working with your dad. That
Fair,
kind of
fair.
stuff. Right.
Yeah,
Your age.
I'm 24 years old. I've been
Nice.
working with my dad since I was about 19 now, 18, 19. I went to school briefly to play baseball and ended up coming back home, started wholesaling a bit and flipping with my dad and just learning the whole business. And now I'm basically full time with him, buying, flipping, and just learning the whole business.
Awesome. What's your role in the business? Are you out there getting the deals? Are you doing the rehabs or the management? What's your role or what's your favorite part?
Yeah, a little bit of everything. I mean, I love acquisition. I learned a lot from wholesaling, honestly, and just evaluating and finding
Mhm.
deals, off market deals, everything. So my bread and butter is the acquisition, but just learning a ton on managing crews from him, rehabs, everything, people. So it's been awesome, honestly.
And,
All right. So you said you love the acquisition. That's the art of the deal, right? That's the
Totally.
deal making, the contract. That's fun. That's the fun stuff. So how did you do it? You got on the phone, started cold calling, started calling for rent signs. Tell us a little bit about that. There's a
Basically,
lot of
yeah,
people that watch this show. We got about 2,000 subscribers. Some of them are young, some of them are old, some of them are beginners, so on. So that's awesome that you're 24 and working with your dad. But go ahead, tell
I
us about the
appreciate it. Thank you. Yeah,
yeah.
no, I really started off, it was with a friend of mine. We started wholesaling, started cold calling, hired some cold callers, ran some ads, some online ads, Google ads, Facebook ads. We'd buy some leads too, basically, that other people would run ads, across the internet through different platforms and such. And, we'd get inbound leads, go outbound, call them up, and just, we basically went nationwide. So just learned a bunch of different markets,
Oh, wow. Right.
wholesale to a bunch of different people, met a bunch of different buyers, and yeah, it was a really, really cool experience.
So you were getting and locking them up in contract and reassigning contracts. So you had a list
Exactly.
of investors. You were doing the whole wholesale model, huh?
Yeah, exactly. Finding them all, cold calling all the buyers who bought stuff in the areas and just seeing who wants a deal,
Right.
basically.
No, that's awesome. Listen, that's not an easy game, right? It's not
mm-mm,
an easy game. No.
Yeah.
mm-mm.
When your dad and I were around, it was easier. Why? We didn't have this. There was no such thing as Zillow. There was no call rooms from India bombarding me with texts asking me to sell my property, right?
So much competition now. It's crazy.
Right. It's nuts. We used to I used to say, you know what, this if you would have asked me in 2001, what's the secret to successful real estate investing? A young guy, I said, shoe leather. And they're like, what? I'm like, get out on the street, right? And pound the pavement, call the for rent signs. If that building's got a tarp on its roof or that house, you go knock on the door.
Exactly. Yeah.
Right. That's how we did it. So with tech today, it's almost impossible. Like, well, it's not impossible. There's successful wholesalers, but it's super competitive. Margins are tight. In fact, a friend of mine, Property Force, I don't know if you ever heard of
Yeah,
them.
totally.
Yep. Property Force was Oliver Seidler. I bought a fourplex off of him. It was called Meridian back then. And he became very friendly with me. But he wrote a book and he became a young guy. He became one of the largest wholesalers in Florida at one point with like 100 kids, young kids, 21, no commission. I mean, all commission, no salary, just doing that all day.
Excellent.
But guess what? They're gone today. They're closed. It got too competitive. So it wasn't working, the margin tights, and now he's gone. But that was property floors.
And then the
That's
leads, I wasn't really too involved. Those guys were really doing that. That's kind of a young guy's game as far as I'm concerned. I'm more of a traditional. But the PPC, the PPL, the pay per click, pay per lead, and all that. It's just, I mean, there are guys out there spending enormous amounts of
Hundreds of
money on
thousands of dollars a month on
correct.
ads. Yeah.
Yeah. Right. Goran, a friend of ours, owns Home Co. So he took, when Oliver closed, he took this guy Andrew Letourneau, which was his best guy on the phone, and Goran Dragoslovic owns around 400 SFRs, all Section 8, Broward and Dade and Palm Beach. He's all Section 8. He took this guy, and they started a wholesaler for the reason of acquiring their own property, right? But even today, they're spending 25 to 30K on ads.
Right. Yeah.
And they're averaging some months nothing, right? But then he had one hit last month. He got 21 houses from one guy, right? That was retiring. So they continue.
That's
I
it.
don't know what the ROI is and so on and so forth. All right. So Dan, you're working alongside, right? Your kids, your daughter's in the business too, right?
She
Or no?
is. She is.
All right.
So blessed to have two beautiful children. Stephanie is managing the books for a number of our companies. We also have an office in Jupiter. I have a full-time bookkeeper, full-time staff. I own it with my oldest brother, and it's not a family office per se in the sense of a family office, but we all kind of share space there per se.
Right.
So yeah, I almost have like two, Stephanie does a number of my books, and then I have a full-time bookkeeper CPA at my office on Indiantown Road in Jupiter. So
That's office. So it's not easy, right? So for example, I don't know if I can get my kids into the business, right? And my dream in the future is to build, the family legacy together, right? I have two
Right.
boys, and, one wants to drop out of college. He's a senior at Ole Miss and get his captain's license, right? And start a bait business and run a charter company. And I'm like, I couldn't convince him to buy a duplex at college, live in one, rent to his friends, right? And the other one's at FSU. We're making offers on houses in Tallahassee, right? Because now he's committed. He's a sophomore. He's going to rent the units, and the numbers work up there easy when you rent bedrooms for $800 each.
Great area.
Right. And
veterans,
so on.
another angle. Yes, like it's Section 8 veterans. Yep. Like
Right.
Okay, sorry.
But no, don't worry. I can't, how'd you get the kids in? Right? Because they're like, I can't get them in. And I'm like, let's have quarterly family board meetings. And for me, I read a book called Die with Zero, right? I don't know, 5 years ago, a friend of mine. And the concept behind the book is most kids, right, in the United States acquire their inheritance at like 62. That's the average, because that means you and I are, right, 75, 80, 85, and we're out. And by the time they get the money, it doesn't make sense, right? They can't go skiing, they can't buy a house for their family and everything. So the book is basically, it says, and by the way, the other statistic is there that most people die with 70% of the net worth in their house or in the bank. Right? So when I read the book, I said, okay, how do I transfer
Correct.
wealth as they're young, and how do I work with them? And I'm not just talking about dropping a bomb of $2 million or something, right? On the kids, and then they go out and get crazy and become gamblers or something. But tell us, how did you transition them into the legacy? Because right now I got friction, right? They think they're getting money. They don't want to sit with me. They don't want to have a deal. I'm trying to, what's a cap rate? One is getting it. The other one is they're not interested. Interesting. So tell us about how you build the family legacy and they're working with you, because that's a huge accomplishment. At least it would be for me. And I know, most of us out there with kids.
Well, thank you. And great question. And for sure, it is definitely easier to approach when they're young, before relationships, marriage, so on and so forth. But always, still a concern to an extent moving forward. But how I went about it was I have an LLC with my son. I have an LLC with my daughter. And we are 50-50. is what we are. So yeah, there's some other caveats in there. Down the road, if they're in an abusive relationship or this or that, I could buy
Right.
back a share, God forbid, but blessed to have very responsible kids, but you just never know what the future holds. So that's really how I started when they were young. And I created an LLC, and I think Danny's got about 8 properties now in his LLC. Stephanie's got,
Not necessarily smart, but
yeah, I think that's a little too much. We probably should have started
Well,
another LLC.
yeah,
it was meant to transfer wealth and get you working, not to protect your liability. But eventually, you can break that out, or you can form a holding company right above
Yeah,
it. There's ways, there's tricks, yeah,
there
and so
are.
on. But so Dan Jr., right? So what I'm hearing is you started to transfer wealth immediately on the LLC. You gave 50%. You didn't think about, do they need to owe me money back? And Dan, the younger Dan, are you cash flowing from that? Does it pay for your lifestyle at 24?
yeah, it does definitely.
And you share in the revenue, right?
Yeah,
50-50 or whatever.
exactly,
So there we go. And now
Actually,
you can pay for your own lifestyle to some degree, right?
exactly. Yeah,
to a lot, yeah, yeah. I mean, the cash
Right.
flow is actually pretty impressive because a lot of those properties we were buying back as early as 2019. Some of them we built, we built additions, and we have different ways of creating value.
No, that's awesome.
But
Have you done a cash out refi on any of those or not yet? So, okay. So then you got a few bucks at 24, right?
exactly. Yeah, and just keep churning it in, basically, keep reinvesting and keep doing the same thing, buying more property.
Jerry,
There you
we
yeah.
even found a guy who will do an 80% cash out refi for us.
There you go.
That's where we're at.
Right. DSCR guy,
DSCR, yeah.
yeah, like an Old Dominion or whatever. There's a bunch of them, right? But
There's a
that's
bunch of them. There's a Old Dominion
okay.
for sure, Lending One. Yeah, yeah.
Who raises the rents on your properties?
That's a good question.
Typically that is done collectively in the
Okay.
office because I have other family members, as I said. So we try to keep our rents consistent, whether it's single family to, multifamily and what have you. So
No, I think that's awesome because what I'm hearing is like you're an active participant in the cash flow and the income, right? And so they like maybe that's the issue. My kids don't feel they're not active. One's still in college, right? He's got an investment portfolio that he manages, right? And I have to tell him it's Robinhood that I set up, right? But my problem is every time he makes money, he pulls money out, right? And things like that. So I mean, they're good kids, but that's a little different. And where my older son, maybe if they don't feel the income, your kids are feeling the income. So that's what keeps it going, maybe. Interesting, right? It's like, yeah,
different stages. And as you remind me, when Danny did a post grad year at IMG Academy, he was a pitcher. He had Tommy John surgery and a lot of things going on.
got it.
At the time. But back then his interest was not, great. And then when he decided to put the ball down and go into real estate, Jerry, he was all in. So now that you remind me, that's definitely yeah, a big point to that story
Got
for
it.
sure.
Sure.
No, that's awesome. So from the large condos and the commercial properties, and by the way, what's funny is today the easiest loan to get is owner occupied, right? The banks love them, right? And you can do
Oh,
as low as 10% down. As owner, like obviously I own these building, they love owner occupied. That's how your father got started, right?
absolutely.
You know, but it's funny. I had a mentor, and if I link back, and he's like, "Be very careful with buying your real estate because if you're the only tenant and your business fails, your real estate fails." I never agreed with that, but owner banks look at owner operating as the lowest risk, 10% down deals. So it's interesting. So you went from there to the condos to flipping or owning over 150 plus homes, and you did it in Jupiter. Was there a reason why you were focusing on Jupiter or that area? Any particular reason? Demographics? We get a lot of people watching that are moving from New York, and I get DM'd constantly, where do I buy? Where do I buy? Right? I'm like, all right, but go ahead. Why Jupiter? Why Palm Beach Gardens?
Definitely partial. It's where I call home. Most people didn't know about it 30 years ago. Now everybody pretty much is familiar with the name Jupiter, Florida, for different reasons, and demographics. Very definitely, it's surrounded by the pockets that we're buying. I see even today a lot of opportunity. And it's surrounded by pretty much opulence, really. Jupiter Island and everything
Right.
else on the water,
Tiger
literally
Woods.
every
Right.
direction you turn. Yeah, exactly.
Right. So a lot of people are saying where the market's going and things like that. So you say you continue to see opportunity in Jupiter, in Palm Beach County. And what's your business model like today? So tell me why, right? And tell me what's the model going forward. And because the biggest complaint that you always hear from us is I can't find a deal.
Yeah.
Right.
Yeah.
So tell us a little bit, how do you guys get over that and so on and so forth? Because you mentioned there's still a ton of opportunity there.
There is. I mean, very definitely, sourcing deals is an issue. I've been in the area for a long time, so I know a lot of people, and I'm constantly, calling people every day, and just, turning over every rock, every stone to see, but it's been difficult. It's a limited market, obviously, and the scalability is you know it's just tricky at best if you're limiting it to Jupiter. Now, with that said, we did about 10 deals last year, and each of them is a little time consuming. I think we did a couple of multi-families, the rest of them were single families, and we're converting some space. I have an expediter who helps us permit additional space, create additional value. But
Got it.
yeah. So it's really
So
pretty simple,
So
strat.
what I'm hearing is out of the box thinking, right? It's not just a fix and flip, but it's how do you increase space? How do you increase
Correct.
bedrooms? How do you do the NOI, right? It's
Exactly.
not just it's not just okay, I'm buying a house and I'm renting it because that never works anymore, right?
Pretty
So you,
much.
yeah, so you've always got to come up with what we call a value add strategy,
Absolutely.
or adding anybody become a GC on the team.
We have talked about it. No, none of us are currently GCs. I'm a licensed real
Yeah.
estate broker in CAM. Uh, I don't sell real estate. I'm not a realtor, but I do have a broker's license.
Right. That's just
Yeah.
it. So, in my experience from learning from the big dogs, right? So, I interview somebody who's got 600 million in real estate. A couple of guys got this. There's a guy, Jim Shields, who actually is based out of where the Fountain of Youth is. Where's the Fountain of Youth?
Ponce de
St.
Leon.
Augustine.
St.
Yeah,
St.
Ponce de
Augustine, thank
Augustine.
you.
Leon.
Yeah.
That's it. Right. Brain farts. And his name is Jim Shields. He's been on the podcast. Him and his wife, by the way, have 4 kids, and they run a podcast called 18 Summers, right? And the whole precipice of it is, how do you get a high net worth, high performing family in the real estate business, but without losing your kids? 18 summers. So meaning they have 18 summers together, right? So that he's got a podcast. So he was in your world. And what I learned from him is very similar track record to you, 150 houses, a little bit more, at 200 deals, this. He eventually switched to a build to rent model. That's what they did. So now this guy built 4,000 build to rent houses in 2 years, in the last 2 years, right? And they got a GC license, but the biggest problem for him is land. So that's why he's up by St. Augustine, and they're doing it. They do 30 houses minimum at a crack, right? So they buy parcels and they build the rent and they do it. He's really good at it. And now he just got acquired by Sumitomo, which is the largest Japanese construction company conglomerate, international, right? And they just got acquired 4 months ago, 51%. And his cost replacement to build dropped 35% because of their economies of size, right? So it's interesting. what I've learned, because I'm not, me, I got 144 units right now, multifamily, maybe 27 houses. I own some retail, commercial, industrial, this, and I'm like you guys, I'm a value add guy, right? And I don't GC, right? I value add and I use GCs because I'm afraid of ground up construction. That's the
Little
truth.
bit, yeah. I
Right.
do it, but
But
yeah.
I've got over 100 million plus portfolio today. But the point is, and I just made an offer on 40 units this week because the deals are here, by the way. Now, that's what I see. Finally, sellers and buyers, we had a 2-year like stagnation period, right? And now sellers are becoming realistic. Interest rates dropped a little bit and so on and so forth. So what I've
Encouraging.
learned, yeah, is at scale, value add doesn't work. So if Dan Jr., you want 1,000 houses, right? Let's
Yeah.
say down the road, right? Because you're obviously, 24 years old. These guys all shifted to build to rent, right? And they were started, and their focus was to steal land deals. Or there's cities and municipalities today, Tampa Housing Authority, Orlando Housing, they're giving land away if you build low income housing. So low income housing. So that's where they go. It's interesting, right?
Very.
So
Really
yeah,
interesting.
correct. Because think about it. If so, for in the multifamily world, I had a period where we ran all over the country and did thousands of units of value add, and I had 2 partners, and even from my friend Danny Catano owns Pia Residential, they have 600 million AUM, assets under management, all multifamily. It's a syndicator. They raise money, right? And by the way, they don't make any money, by the way, when you're a syndicator. They struggle because the investors are making money, but they only make money on cash out refis and exits. So the point is, they underwrote 47 deals last year nationally, and they can't. And they have capital from investors, right? Can't buy one because with technology today, every 100 unit or up multifamily across the country, everyone knows where it is. Everyone knows where it exists because the inventory is available on public record,
Yeah.
right? So, and now you're competing with institutions. So it's so hard. So what do you think? These guys all switched, the multifamily guys, to ground up construction or build to rent. Right. I just spoke at the IMNI SFR. It's called IMNI is the organizer for the conventions. IMNI, they're big, and the largest single family SFR was in Tucson, Scottsdale, Arizona, and I just spoke there. And half the room was build to rent, 10% was wholesalers, and the rest were guys with 10 houses to 500 houses to 200 houses, right? And it's interesting. Also, one point I'll make, and then I'll ask the question is, if you asked me today, who's the biggest single family residential SFR broker in Florida? I don't have an answer, right? Now, if you ask me who the biggest multifamily guy is, right, I could tell you in 2 seconds. Caleb Weaver, Nate Goodman, he sold Grant Cardone, all his stuff, right? Daniel Cunningham at Marcus and Millichap, Joe Thomas. I can tell you who the biggest industrial broker is, right? I can tell you who the biggest, whatever, retail broker is. I know all of them, right? Because they're the products out there, but there's no such thing in the SFR world. So I'll leave you with that kind of like, because I don't have the answer, right? Where do you get the inventory? And I sit on the board of my friend's prop tech company called Sell to Rent. So they're creating a leaseback company and they partnered with divorce.com. So their he's on a mission, this guy, to save divorced families. So when you have equity in your house, let's say you have a $300,000 house that is worth today and you have 150,000 in equity, there's a divorce, right? The first thing they do is sell the house. What he does is an algorithm that says, hey, wait a minute, don't sell your house. We'll buy your house 10 to 12% below market, right? And an investor will take over and you can lease back the house with a prepaid lease for 10 years. That's his model.
There are so many smart people out there. Yeah.
Right.
Yeah.
But listen, do you know why he created it? Because you can't get inventory in the SFR world. Right? So what do you think, Dan Jr., general contractor?
We've had a lot of conversations about it, honestly.
Ironic you should bring it up, Jerry. Ironic you should bring it up. Because
exactly.
very definitely it has been a topic. Yeah.
And listen, you know that in Texas, you don't need a license to be a GC. I did a little homework because for me too, because I'm tired of freaking I can't find a deal, right? So, okay, but maybe I can find some land. And by the way, Sumotomo, now you can call this guy, Shields. He's a great guy. He also spoke at that IMNI. He was on a panel with me. And Sumotomo, if you can identify 30 lots, they will finance the dirt and the construction from cradle to grave, everything, 30 home minimum. But then you got to lease it up. But they have to believe in the project and they have to believe in you. But they'll finance the whole thing. I was in shock. I was like,
Yeah.
really? Yeah. So it's something to
Oh,
think
yeah.
about. Right. But by the way, in Texas, you don't need a contractor's license. In Michigan, my brother got one. It's like nothing. In Florida, it's hard.
Yeah. I
Everybody
looked
says
into it. It's like 4 years or something like that, right?
you can do it.
Yeah.
The test is a nightmare. I have a friend who took it 4 times. He failed on the 5th time he did it. That's how we are and stuff like that from New York and so on.
Absolutely, Jerry. Absolutely.
Right. Okay. So a lot of people are listening here are asking themselves, they're sitting in New York under 28 inches of snow, right?
Why?
Right. And
Come
why?
down.
Exactly. And I just got a new COO who's born and raised in Manhattan. He still has a house in Connecticut. He's here. He started Monday. And same thing. His daughters, he's got 5 daughters. They're stuck up north. He showed me the house in Connecticut. They're buried. It's crazy what's going on.
Yeah.
Right.
I still have a brother in Rockville Center. Yeah. Long Island.
Yeah. So everyone that contacts us says, where do we buy in Florida? Is the market too hot? Is it too low? Is it this? Is it the right time to buy? They're always sitting on the fence thinking, right? What's your advice to anybody from the Northeast, Midwest, California? Is it time to move to Florida? Is it not? Give us some insider advice from the both of you. What do you see? Because obviously markets dictate a lot. Price is high, price is low.
Yeah, I mean, I still see extraordinary opportunity in South Florida from both the investment side as well as first time buyers, if you will. What we're doing, of course, is all predicated on cash flow, and the numbers are working and still work for us. Definitely getting more difficult with other variables, insurance and taxes and so forth. But I really do believe with everything that is going on in South Florida right now, from West Palm Beach to Miami, from ServiceNow to the Ken Griffins of the world, and you can just go on and on with what's going on with everything that the current administration is trying to do for real estate. I could not be any more aggressive on real estate, and I've done it my whole life. It's all I know, and yeah, I'm very, very positive moving forward.
He said it all, folks, right there. He cannot be more aggressive in 2026, right? And listen, I agree with them. Why? Every time I overpaid. I thought I overpaid for a property, and I've never lost a property, which I know you've never lost a property, right? And this is 2008, 2009, right? And units that I was paying in Broward County back then for 40 a door that were renting for 400 a month, right? Or 60 a door that were renting for 550, right? I was buying an OA for 90 a door, blowing my head off, right? I'm like, I just bought double and I got stuck in the mud. And every time I overpaid, right? And then we were paying 100 a door at one point for $800 a month rents, right?
Yeah,
And
I
was
remember.
like,
yeah.
right. And I'm like, I'm done. I'm going to get killed. Today, I wish I owned them all. Still.
Does it all the time.
Right?
We have this conversation. Yeah.
Right.
There's
And
really
so on.
nothing we won't look back at that won't make sense. But it has to make sense in the present, obviously. And that's
100%.
so
Why single family homes?
I find we can really get the most value out of them with the bonus ads and so forth. More limited, obviously, with a multifamily. However, you did get my attention with the build to rent. I'm not going to lie, because these value adds take a long time to do. That's
Right. I'm just
yeah.
sharing what I learned from these guys at scale. Listen, you guys are no small. They think they're small. That's how humble these two are, right? They own probably 150 plus homes. Let's say average value $300,000 to $400,000. That's a $50 million portfolio. So they're not small. Okay, you're in the top 1%. Believe it or not. Do you know
Thanks.
that only 4% of businesses in America do over 2.5 million in gross revenue? 4%.
Wow.
That's it. So you're in
There's
the top 4% right there with
cool,
2.5
cool,
million in revenue, gross rents, right? There with
cool,
2.5
cool.
million in revenue, gross rents, right? Then if you're doing over 10 million, you're in the top 1%. And if you're doing over 100 million, you're in the top 0.25%. And if you're doing over 500 million, you're a Fortune 500 company. So just for you and your son, like the perspective, why? Because I'm an EO member, Entrepreneurs Organization, YPO. We don't let anybody minimum to get in, which your son could probably qualify is 2.5 million in gross revenue. And EO, Entrepreneurs Organization, the founders, we learn and grow from each other, from entrepreneurs. It's a big Palm Beach County branch. YPO is 10 million. So you give yourself credit. People don't realize that only 4% of businesses in the United States do $2.5 million in revenue. The rest is lifestyle. You know, they own a dry cleaners, a family dry cleaners is doing 600,000 and they make, 200,000 and that supports the family across America. So you're already there. So forgot where I was going with the question, but what was I going with the question on that one? I don't know. See what happens? We get old. No. So first of all, give yourself credit on that. But yeah, these guys at scale, they're all moving to the build to the rent model. Why was I saying that? By the way, I sent you guys. And by the way, we can be casual. They'll cut whatever you want out of this. So that guy, he's a really good guy, and I guess a lot of people know Adam Stern or Adam Stein. Something he owns Strata, right?
right.
And he's also come into it. He's got his own podcast. So he is one of the largest single family SFR brokers in the country. So he's spent, which is only one or two. Okay. And what does that mean? He spent 15 years dealing with families like yours who have a minimum of 30 houses. And he's the guy that does it all off market, 30, 50. So he's got an inventory pool like that. And now he's starting a new technology platform. I think it's called Go High Level or Go Level, where everybody like you, because there's nowhere to get inventory at scale. I think he launches next month, where they just all go into a portal. It's called Strata, and he's a really good guy. And you just go in there and you put your inventory in there that you would consider selling, right? And the platform analyzes the deals, analyzes the rents, analyzes the markets, and then it allows you guys to interact with the other SFR portfolio owners. And then if a deal struck, the platform just gets a transaction fee. That's his dream. He's
Wow.
creating it, yeah, because
Explained
it's
well.
very
Yeah.
right, because he doesn't know where do you get size, but he's been doing it on the phones because he knows Dan and Dan Jr., right? And he says, hey, I got 40 houses up here in whatever it is, Ocala. Hey, I got 30 houses in Palm Beach. That's how he's been doing it for a decade. So he's trying to tech stack it. And by the way, he's only like 39 years old, something like. He's a young guy. So I was impressed, and yeah, and he goes to these IMNI events, which would be good for you, the SFRs, you guys, and that's where he gets his inventory. He walks around the room, he sees a guy who's got 20 houses, 50 houses. This guy Jamie in Ohio has got 900 houses. That's where we met. So interesting. Sometimes those events are good. And by the way, in the convention center, 90% of the people in there are the DSCR lenders. That's who it is. The rest are software guys and so on and so forth. So it's super cool.
Yeah, it's really cool.
No, it's cool. It's what I learned. It's fun to get out there. You never know what you're going to learn, right? So the next Danny, she'll know. Next I am an ISFR. I think there's one in Florida. I always get invited to speak or this. I did even the short-term rental ones. We'll go. I'll figure it out. We'll do it. So on.
But we'll
All
see
right.
at one of those next ones. We were hoping to catch you in Scottsdale this year, but we couldn't make it. But yeah, this is.
I think there's one coming in Florida.
Is there?
Yeah, Danny would know, but yeah, Danny will reach out. The IMNF SFR. Go to IMNI. That's the big order. They're the biggest for the SFRs and so on. All right. So when we first connected, your son mentioned things were kind of everywhere. when it comes to insurance, different policies, different agents, tons of renewals, right? All of this kind of stuff. And it was a nightmare to manage it all. Tell me what that situation looked like when we first met and we got that first email, right? So we could see, because this is very typical, right? We see, believe it or not, it's typical. It's not, you're not some kind of a unicorn. Right. Well, Robert had a woman with 282 houses. I mean, he did her 2 years ago in Tampa area, 5 counties. Disaster on the insurance fronts. So tell us where you came from. How was it? And why did you reach out to Premier?
Well, honestly, Jerry, the first time I heard your name, the first time really you changed my life for the better. I don't want to sound corny here, but I'm reaching for words, but I mean it.
Thanks, man.
And made my day. We were selling a 30-unit complex in Jupiter.
That's right.
Larger deal for me. It was roughly an $8 million deal. And insurance. I put this thing on the market for sale, and then I hear from my insurance agent our premium is going from $45,000 to $250,000.
Oh my God.
Okay, and that was the lowest quote. The other quotes were just obscene. I'd owned this property for probably close to 20 years. And it had gone up, proportionately, but never anything as significant as that right when I go to sell the thing, of course. So I was very fortunate to have a gentleman, the buyer in this deal. I won't mention his name. I believe you're familiar, but
he's a
good
great guy, great family. Yeah.
Great family. Yep. Young guy. And he was the one who actually said, wait a minute, I've got an insurance guy like no other. And he actually, gets you involved, and you come in and you insure the place for less, all right, than the current insurance. That's no joke. All right. And this is, I'm not trying to plug Jerry here. That's a true story.
No, it's the truth. And people, they don't get it. Like it's shocking, right? And this is what I do when I stand on stage, when I'm at IMN or SFR. I do 10 minutes where I get on a panel. First thing I say in the room, I stand up stage and I say, yeah, I own real estate, but I'm also the CEO of Premier Production. Who in the room likes insurance? Now one hand goes up.
Yeah, exactly. Hilarious. Yeah, sorry.
Now one hand goes up, right?
Come on.
Now you understand why I have to recruit from the real estate side.
I do.
Because I'm like, so audience, that sounds shocking, right? $50,000, let's say, to $250,000 on a building in Palm Beach County. And that's no joke. And I'm assuming that's right around Hurricane Ian, right?
Correct.
This is 22, 21,
yeah,
right?
Yeah.
That's what happens. And by the way, that was the lowest quote. And as we know, right, the lowest quote, and it's unheard of what the insurance market can do, but they can do it to you. So, by the way, as we know, $100,000 in NOI lost is at a 5.5 cap is $1.8 million off your sale price. Just like that. So we're talking about losing $3 to $4 million.
I was sick to my stomach. Yeah.
Correct.
Yeah.
And that's the deal, on an $8 million transaction, 30 to 40% of the value lost because of an insurance guy, right? Unbelievable. And more importantly, the buyer can't get a loan. There's just no possible way. He just lost. He's going to come up with 50% down to buy a property, if not more, right? So that's what happens. And really, so let's keep the insurance industry somewhat decent, right? But that's what happens when you, as a real estate investor, are dealing with an insurance agent and not someone who understands real estate. They have no clue. They have no idea. And I'm not saying this guy was a bad guy. He may or may not been sophisticated enough, knowing how to deal with it. Right. So all we do at Premier is real estate, 90% of what we do. And then we do their houses and their boats and this, because it's all property. It's very similar, right? We do a little bit more, but 90% of our focus is commercial real estate based. And we get that. So, and we have a core value called find a way, period, end of story. So if you don't understand your client's problems, right? How do you solve them? Because if you're an insurance guy and you're trained on risk and this and everything under the sun that needs to be insurance, they don't understand entrepreneurship. They don't understand that Dan and Dan Jr. are okay with risks, right? We've been taking risks our whole lives. And that's the biggest issue, is just they're not bad guys. They just
No.
right. So I always say, what's the purpose of a business? What do you say, Dan Jr.?
Said make money, right?
That's what everyone says, right? I agreed. That's part of it. But the real lesson that I've learned, because I used to make money on Wall Street, destroying people with stocks, wasn't my fault. It was the stock market, whatever, right? Is solving people's problems, right? So the real purpose of a business is to solve the problems. That creates money. And obviously you can't do one without the other. So you are correct. So today I understand that, right? And the bigger the problem that I solve, what happens? The universe rewards me with 10x money, right?
Yeah.
And that's the key. And that's the key, because you're solving a problem. I'm not making commissions. And I did that on Wall Street. Look what happened to me. Blows up. Isn't, our creator created the universe perfectly. That's what happens.
Seriously.
Because
I love it,
the
Joe.
commission was about me. And it wasn't that I was, these guys wanted to buy stocks, right? And you'd sell them Intel and they'd yell at you and, why didn't you buy me Disney? Nothing you did was good, because that was the world. Because what value were you creating? There wasn't really solving a problem. You were a bookie. So it's the same thing in the world of certain insurance companies. For them, that's a home run. You just quadrupled his revenue, his commission. So put yourself in their seat. What do I do? What do I do? Do I make 400% increase on the commission, right? Instead of $5,000 last year, I'm going to make 25,000 now. That's 5x, but that doesn't work. It doesn't solve the client's problem. It's not, we call it LTV, lifetime value, right? Of a client, not loan to value. And by the way, most of them, since they're not solving the problem, they're selling insurance, which they're good people and all that, but they're not going to go the extra mile and say, how does government play a role? That's what that was. It was government. Because government and our tax dollars do that. It fixes that in crisis, right? And at that point in the market, it was ready. But here's the difference. It's going to be lower, right? But it pays 4 to 5% commission, and it's 12x the steps to secure it. That's the difference. So that's why a lot of them in that world, they've never gone that far, right? So like to say, okay, what do I do if my client does that? So that's really what the situation is. And I always say there's riches and niches. So you guys are SFR
Love it.
guys.
Yeah.
Right. You know SFR better than anybody. I don't know SFR like you guys. I can't do it. I can do multifamily. I can do retail. I can do stuff, but I don't know SFR. So it's the same thing with insurance. If you specialize, right? I just came back from Nashville and we had a facilitator coaching us, and he says, what's your unique ability? Right? And he said, anything that's not your unique ability, you shouldn't be doing. So we spent 4 hours to figure out what our unique abilities were. Where does things come easy to you? Where are you in the flow? Like, if I'm Jimmy Page, I'm playing guitar, right? And I'm in the flow. But guess what? Eric Schwartz, who's his manager, he sells the records. Jimmy Page can't sell records. So that's what I took out of this facilitation. What's your unique ability? And I've learned about this from going to all these speaking events and the Tony Robbins guys and all that stuff. Stick to your unique ability, do it 1,000 more times, and then surround yourself. You got family. That's the best one. With everyone has a different strength. Let them do theirs. I do mine. And you have to have the same value systems. And you build great teams. That was my biggest takeaway today. So today, I solved the problem for me in insurance, right? But to me, I just want to show up and sync and strategize. That's this, right?
Incredible advice.
I don't want to do the ops, right? I can do the ops. I love the ops. I love the problem solving. So yeah, that's what my biggest takeaway was from a facilitator in Nashville right before the storm hit. I got out of Nashville, but it was good. So Dan Jr., right?
Yeah, right.
What's your flow? That's what they call it. They call it the flow. When you're in a state of mind where time just, oh my God, that was 6 hours. right? That went by. That's what they call it, and so on. All right. So Robert Colson, who's a rock star, he works for us, right? And Robert's one of my favorite guys. He's got a daughter he's just a huge heart, right?
Huge.
Huge heart, great guy. Goes to church on the beach every Sunday with his mom, right? He's one of those guys, right? And by the way, that's the other thing is I've learned you got to surround yourself with the right people with the right value systems, right? And the same vision. And once you figure out how the universe works, which just means I breathe out carbon monoxide and that tree gives me oxygen. And that's a fact of the universe. I can't fight it. It's the same in business. Robert's one of those guys, right?
I agree.
But right. And listen, I can't from my side, I've hired people from the insurance industry and they sold a client a $32,000 policy in the first month when they could have put them with Citizens for 18 during the crisis, and I fired them. I set that example. And then he walked out, and 2 weeks later he came back, right? And I go, why? But we don't do that here, right? That's what they don't get. So we had to change compensation structures. Today, we sell, I don't know, we're sure about $5 billion worth of real estate. We're over $30 million because of that philosophy, right? So I just sharing that. It's awesome. I love it. It's faith-based kind of. Okay, so when you met Robert,
You have
you
to.
had, you had, I don't know, how many policies did you have? 120 policies, 130 policies?
Yeah.
All the SFR? Yeah. Okay, so tell us what Robert did. Yes, we saved you money, but tell us the other holes that he fixed and why he was good and why it kind of changed your life and what else Premier did, right? This is a plug for us, but this is real, folks. Okay, I can't make this stuff up, right? And when Dan sent me an email after I referred him a local credit union that waives wind, who's a great guy, Dave
Growth.
Mateo is just like us, right? I
Absolutely.
close almost every small deal. He's got it. One phone call, right? He tells me do this, tells me do that, done. Right. And when's the last time your insurance guy referred a credit union that waives wind insurance?
Never.
That's 70% of the commissionable premium. Well, yeah.
Yes.
Okay.
Jerry.
So
Yeah.
tell us the story. Tell us a little bit of the story, guys. What we did, how we did it, and why it was so cool.
Well, obviously been in real estate for a long time. Insurance is nothing new, but definitely out of hand here in South Florida. And as we've established, my previous agent was good people, but going through the motions and with what we have going on down here with Citizens, BPOPs, flood insurance, to go through the motions is just waiting for a ticking time bomb, in a sense. So just kicking a can, I could see that, and kind of an agonizing thing to watch. Took a little while for us to reconnect after that whole story, and fortunately we did. And you put me in touch with Robert. Robert is everything and more, Robert and Pawan, that you described. And essentially, he created something that I've kind of needed, I think, for, decades. And that was a master policy of sorts where we could, pretty much slide, properties on and off of, whether we were flipping them or if, they were buy and holds or what have you, just the
No
flexibility,
inspections.
the ease. And then on top of it, yes, no inspections, of course. And
Not on all of them, but you have a Shepherd Capello policy, correct? It's a Shepherd. That's what it's called. Yeah. No
we do.
inspections. Go ahead. Yeah. Awesome. Go
We do, but no, honestly, and then just the prospect of getting out of Citizens, avoiding all of the looming flood policies that we're going to have to get, and just really brought us up to date. I mean, we had 150 some odd policies all over the place, and it's a little embarrassing. I've been doing this for a long time, and you guys really cleaned
Listen.
me up.
Yeah, but don't don't even feel that way, because here's the thing. Like, I get calls from Marsh, risk management, all these guys. So mom and pop Main Street is being rolled up by private equity, right? The largest M&A space in the country for the last decade is insurance agencies. There is no independence left, right? I mean, yeah, you got the Allstates, which they're gone almost. They're done. Allstate's done. They were bought out. Now they're going to dismantle them. There's no independent agents left. Private equity has literally bought up everything. And now Brown and Brown, which is the biggest roll up in history, they bought everything. They just made a bid for Risk Strategies, which is the second largest roll up. So anybody that had over $1 million in revenue, I get called daily, right? So if you think about, yeah, you still have mom and pop 400, 500,000 insurance agent, very rare independent. They're usually Brightway, they're a franchise, things like that. Those guys are good people, but it's a different level of sophistication for somebody who's got a portfolio of your size, right? They just don't get it. They're doing houses, cars, stuff like that. It's not their fault.
Exactly.
So,
Exactly.
Right. And so, and most people don't know, because no one educates them on real estate as a profit lever, on focusing on NOI. And again, I had the same thing happen to me on 140 units in Miami Beach when Wilma and Katrina came through, and my insurance went from 121,000 to 305 on a Fannie Freddie deal. And I was like, I'm underwater, right? I'm like, what am I going to do?
Yeah.
Right. And that's why I brought it in-house, and I had to solve the problem, because I didn't know how to operate in Florida coming from New York. And then so on. So when private equity rolls up all of these agencies, private equity is about you and me investing with them and profits and sales, right? So there's nobody out there who's talking about this. And that's why, number one, I was able to attract a really great COO, because he's a real estate guy. This guy's done $1 billion ground up construction in Manhattan. And when he heard us here, he's like, shit, I've been writing checks for millions of dollars for insurance. Why? Because I thought I had to, right? That's how the most sophisticated investors, I got a guy, Viking Capital, 6,000 units. They think it's a line item. They don't get how deep you can get. So that's what we did. So the point is I love it, right? Because at this point, I thought I was going to relax with my real estate portfolio, hang out with the kids, go fishing, all that kind of stuff. But now I'm like, that's it. I'm on a mission, right? To spread this. Insurance is a profit lever. It's the biggest one. You can reduce it by 80%. People are in shock, but it's true. And by the way, so, and for me, my biggest challenge, right? So Dan Jr., is hard to find what we call intellectual capital. People that will align with me and come and work with me from the real estate side. So if you got young guys who want to make some money and want to solve people's problems, like you and your family, that's the hardest thing for me to get, right? So that's if you know anybody, let me know. We'll train them and we'll good, but they got to be good values and all that stuff. But I'll go to FSU. They have the second largest insurance school, risk management school in the country, and then they have a real estate school. I spoke at Trends there. There's 82 people a year that graduated the insurance school. 82 people your age, right? And who's in there? What they call I days, insurance days. Marsh, Gallagher, Risk Strategies, Brown and Brown. And they pay them $100K, 99.9% job placement. And they take them away. Gone. And now they're going to be calling you, selling you overpriced insurance, because they're doing the right thing, they think. That's the industry.
Wow. Yeah.
And people at 24 years old, hey, you want to come and work with me and sell insurance? What do they say, Dan Jr.? Insurance?
Yeah, right.
I got to call it like OnlyFans insurance or something. I don't know how else. I can't recruit young people.
Oh my God.
It's the craziest.
I think it's an amazing business.
Correct. Because you're smart. You got a great entrepreneurial father, family. They're teaching you. But the masses, man, I say insurance, they won't come work for me. It's crazy.
That is
it is crazy.
Yeah.
And guys like us love you for it, Jerry, obviously. And
thanks.
the other thing that I would add too is, in fairness to my other agent, which everybody might not be familiar with this, but they don't necessarily have the exposure to the markets that you have. So
correct.
You can write coverage with companies that they cannot. And so
100%. That's the other side, the backside. You got to get the markets. Wait, now we're going to have our own programs. By the way, that Shepherd program is a bank REO program. So you know how when you don't, pay your insurance or whatever on your mortgage, they force place it, right?
Yep.
So that's a blind insurance coverage that just covers your mortgage amount, right? Now, why is it so expensive? Is because they don't go to the property. They don't know if you got hurricane windows or whatever, right? They just cover the mortgage, and that's why it's so expensive. So the gentleman that I know who was a wholesaler saw that product and 7 years ago went to London and created the product for fix and flippers. Why? Because it's so flexible, right? Get on, get off, pay for what you
Exactly.
need, right? And covers loan amounts, does that, and no inspections, but he can do it at a reasonable rate. And I'm going to even say this on the air, guys. I met with an actuary yesterday, and the actuary average insurance policy is 65 cents on the dollar's profit. Yep, except for workers' comp. That's a different mess. Okay. That has claims everywhere. That's why the state is the biggest workers' comp person. Whenever the state steps in, that's where there's no money. 65 cents on the dollar on the average property policy, because that's what it is. You price it at $1, about 10 to 12 cents buys the real insurance, right? Small claims. Because if you have a 2001, a 1990 house, even if you took a category 5, the models say you're only going to lose 7 to 8% of that, right? But there's always one house that gets hit by a tornado. Okay, that's less than 0.5%. So the point is, and they don't, by the way, they don't also know where you own the house. They don't know what the land value is. They don't know your risk tolerance. But that's how crazy it is. And then the second layer is a layer that secures debt. So if you do have that $2 million claim in the pool, that layer is a credit line to the bank, open, correct? And then that pays you the $1 million, right? And then that syndicate over time pays the debt. And then there's another third layer that's a cat layer. But most people don't know how it works. So you're really only funding $1 of insurance with 30 to 35 cents. And the debt pays.
And that's
Because
what I was gonna
why? Because debt, a credit line, because it's very rarely triggered. If you have a $5 billion in insurance, right, and the premiums that are coming in, don't forget, right, is that they can use that to pay out too. Very rarely. So in Florida, we've seen 2 years with no really major storm. Look what's happening to the market, right? And by the way, when the fires hit in California and the storms hit in Ian looked like a $3 billion event. It was mostly flood. It wasn't even wind. We had 4 houses a client has on Captiva Island, 1970s construction on stilts. It was a flood claim. The houses are still standing. You know, Captiva Island, North
Sure, of
Captiva,
course. Yeah.
right?
Bubble
Yeah,
room, all that. Yeah.
there you go. And the
Yeah.
only thing he lost was his illegal 1-bedrooms that were below the stilts, right? They got
You're
washed out.
familiar with the style of architecture. Yeah.
Right, exactly. So that's really what's going on out there. And the lenders own a lot of the insurance syndicates and pools, and they mandate and they check box it and all that good stuff and so
How
forth.
about, let me ask you one other real quick thing. Accordia. I was with them. They were a big independent agent up and down the East Coast years and years ago.
They're
Accordia.
gone,
They're gone. Yeah.
bought
Years
up, bought up.
bought up.
They're gone. Listen,
Yeah.
it's a great business, by the way, Dan Jr. If you want to, I mean, you could start with your learn or anybody, right? But 14 to 18 times EBITDA is the sale price. So times net profit. It's unheard of. That's what they're paying for insurance companies.
Yeah.
And by the way, there's a new term in the world of entrepreneurship called ETA, not, estimated time, but entrepreneurship through acquisition. So Main Street is being bought up by private equity. So they're taking mom and pop landscape companies that do 300,000 in revenue, right? Family business, right? That's what's called a lifestyle business. Family works in it, pays the bills, everybody's working family, gone. They're rolling them up. They buy them at 1 times revenue. By the time they get 10 of them together at 3 million, they're worth 3 times, and they sell them to private equity.
Wow.
That's what's going on.
I thought you were
Yeah.
going to say assets. No, that surprises me a little, honestly.
Well,
Yeah. Not
because
insurance companies, but those kind of companies. Yeah.
Well, because Blackstone and BlackRock bought up all the houses, right? So the assets, no, that was done. You're right. But now what are they going after? They're going after Main Street. I call it Main Street, right? I'm talking about that dry cleaners over there or that pet grooming place. They're rolling up 50 pet grooming places. That's the new
Wild.
thing.
Wild.
Yeah. It's crazy. Like
That is wild.
people say there's no capital out there. There's so much capital out there. It's crazy. And by the way, I'm sure Robert explained it to you. There's a cycle in Florida. Right now, we're in a 2-year clean cycle. Rates are coming down. We're using open market. We're using Shepherd and Campello, this, that. On that portfolio in Tampa, we were in the same master policy world, right? And it was a Zurich policy. I remember it. And let's say it was a $22 million replacement cost value. When Robert had it, placed it with Zurich, it was the cheapest place to go on a master with a lot of abilities. When Ian came in, because it was mostly that side, Zurich Renewal went from like $142,000 policy to $22 million in value. The Renewal, because they are forced to give you a renewal, that's how they do it, came in at $328,000 with a 10% wind deductible, which the average house over there was worth 80 grand, right? Never get paid, tripled. Robert took 2 of her team members. They were a bookkeeping accountant, built a Google Drive. Robert's the man. No one could do this. With this woman, she's awesome. And with her team, took every house, transferred it to Citizens, and reduced the premium from the year before. I mean, you can't do that. You can't do it unless they have a team member to do it. She had to do whatever it was, 250 inspections, all in 2 weeks. And they built a drive, they built it. And by the way, 34 of those houses could not qualify for Citizens because the roofs were original. And she did some refinancing, paid those off. We did the portfolio, did all that kind of stuff. And then once she put the roofs on later, we moved them in and she refinanced those houses. So that could happen one day. But that's the guy who does it because you don't have a choice. He's not going to call you and say, hey, your insurance went up 350% because you can't do that.
Correct.
Yeah, you can't do that. So that's what he did for that portfolio. So when you guys called, and I'm like, okay, this is right up. And Robert handles this big. I mean, Robert can handle a $1 billion medical company, right? Like he's that good. But you got to want to do that. You follow, and you make less money. That's the difference because he's worried about what's going to happen with you. She's going to lose these. You can't take, you know what that's like. That's like going from $800 a door to $3,000 a door overnight. There's no point, so on and so forth.
No,
Yeah.
he is amazing and impressive. The thing that intimidates me a little bit are the 30 roofs there, not going to lie, but it is what it is. So,
Yeah.
you
By the
figure
way,
it
we got a
out.
guy that Gorin with 1,200 units. He's all Section A, 300 single family homes. He's now trying to build single family homes. You can put it anywhere. Yeah. He's trying to build single family homes at $135 a foot in Section 8, 4-bedroom, 2 baths, because the voucher is $4,200 in Broward County. That's what he's trying to do too. Yeah. So there's cool model. So Dan Jr., what's your takeaway from today?
Man. Yeah.
I love it, man.
I still have a lot to learn from both of you, honestly. You guys are both have so much experience, and I'm lucky to just be sitting on this podcast with both of you, honestly.
Oh, that's awesome. Man, listen, that's what I tell my kids. I'm like, you want to climb the mountain? Yeah. My son will say, I'll do it myself. I said, why? Call somebody who's climbed it 5 times and get him next to you. How fast is that going to work, right?
Sure.
And we don't have to do it all ourselves, right? So whenever a young person calls me and says, what's the one advice that you got? Wherever you're going and where you want to go, get a mentor that's done it before and you're sitting right next to one.
Right advice.
And that's right. And the key is for them to understand that, especially when it's father-son, father-daughter, right? Because my son wants to do things on his own and I can't tell him what to do. I learned that lesson, right? If I tell them, they don't listen. But if I sit back and coach and say, well, what do you think? What do you think's the fastest way up the mountain? Should we go by the riverside? Should we go right? Like you know how hard it is for your dad and I to coach versus tell. My dad would say, do this. And if you don't, get out of here. Right. Or my dad would just say, shut up, whack. Right.
No, I'm really lucky.
Different generation for sure. But yeah,
I
similar roots too.
Right. The more we tell them what to do, the more they don't want to listen. Right. Yeah. I learned that the hard way. I did 2 summers ago. My son said he was going to drop out of school and become a captain and do that. And I said, no, you're not. If you do that, I'll take your truck. You know what happened? He didn't talk to me for 6 weeks. I took his truck and he stayed at his friend's house. Didn't work. Did not get the result that my dad would have got from me. So I folded. Right.
And I feel, yes.
Right.
I feel you. I feel
and I'm
you.
like, this isn't working. It's 6 weeks. He won't talk to me. Like, I'm like, how long is he going to hold out? Right. Because at your age, he's 22 now. You know what? He told me, ciao, later, dude. I'm going to my friend's house. I'll deal with my own truck. Right. And that's what so I lost him for 6 weeks. Who suffered?
Independent.
By the way, who suffered?
Yeah.
That's what happens.
Jerry,
Remember
I so
this.
feel you.
Yeah. No matter how much money we make, no matter what happens, all right, your dad is the same. We are only as happy as our saddest child. Remember that.
Yeah, seriously. And that is a huge reason we're doing it. And the expression that I love, and this includes you, Jerry, of course, and everybody you've introduced us to, but we are stronger together. And honestly, I've shown Danny a lot, but he has truthfully shown me so much. In fact, I think we'd have a hard time meeting today if it were not for his technical skills here. I'm a little lacking in that. Some of us guys are, not necessarily you, of course, Jerry. But nonetheless, really, I mean, he's also kind of brought me into a new generation here, and it's kind of been a renaissance with you and other things, and we're really just cleaning up our portfolio, our balance sheet, and really excited for the year ahead.
Awesome. No, I love it. Listen, I really appreciate you guys, being here, sharing this, right? And this story matters, not only about insurance, not only about real estate and things like that, but there's a lot of lessons here: family, legacy. And believe it or not, I can sit here and say, hey, you guys are rock stars. You guys got a 50 million plus portfolio. People out there, believe it, the masses, they're salivating at that. And that's what, number one, you should be proud of. But the real story here is the legacy here, is the family, is how you work together with your son, your daughter, hand in hand. That's a dream that only 1% get, right? Forget the 4% that we mentioned earlier. So I really want to applaud you. This is what happens, folks, when value systems, faith systems align and people do the right thing for each other and solve each other's problems. And the best thing about it is how we come out of this flourishing, right? Everybody, my business, Dan's business, son, the family, the mentorship, and everything. And this is why Dan Sr. does this, and this is why Jerry Katz does this, right? And sometimes we don't stop to realize that, but that's the truth. And that's really what's going on here, right? And believe it or not, we are lucky, and we created this. So that's what I want to applaud you for. Awesome.
Thank you.
Love it. You will be my best friends forever. Remember that. You got me
Forever.
right here. Yeah, I'm serious. I couldn't.
Seriously.
It's hard to find the people like this, right? I talk to some people, talk to other clients. We tend not to take clients that we don't like. People do business with people they like and share values with. So what you guys have is really special. I want to thank you for being on the show. I'm so happy you guys, we have a relationship. We need to hook up at IMN or whatever. And next time I come up to Junior, you guys are going to join me at that house because they're a rock star family too. They're near your neighbors. So
I can't wait.
100%.
I can't wait.
Awesome. Thanks, everybody. Whoop, there we go.
Thank you,
That's
Jerry.
my little fireworks. Thanks, guys. This is the Apple thing. There it is.
You're the best.
All right,
We love you
guys.
back. We love you
Love
back.
you too, man. Appreciate it. Thanks. Anytime you guys need anything, reach out. If you need a connection, reach out. Dan Jr., if you know people that want to get involved, let me know. We're here. We're here.
Jerry
So
is
let's
the
help
man.
out.
We love you.
You're amazing.
You too.
Jerry. Thank you.
Thanks,
All right.
guys. Thank you so much.
Take care.
Appreciate it,
Thank you.
everybody.
Bye.
Bye.